Welcome, ladies and gentlemen, to a new edition of our interview presentation, of course, online recorded through COVID-19. We cannot travel as everybody else. And I'm very happy to get an update today from Revival Gold. And Hugh Agro, the CEO, is here with us. Hey, good morning to Toronto. How are you doing, Hugh?
Very good, Jochen. Lovely to be with you, and particularly on a day when the gold price is up.
Yes, we love to see that, scratching the $1,800. This is fantastic. Maybe before we start, what's your view on the gold price?
Look, I don't think there could be a better environment for the metal today. We've got all of this stimulus. We've got an easy monetary policy. We've got inflation cropping up in the price of copper, up 90% over the last 12 months. Oil, aluminum, all of the inputs of production, lumber. It's just inevitable that gold is going up, and it'll go up a lot.
Mm-hmm. You want to tell a price target?
I won't offer a date, but I'll offer you a target. Certainly, will be over $2,500 in my scope of reference for the project that we're focused on, Beartrack-Arnett in Idaho.
Super, perfect. Then let's get started with an update. I bring up the presentation here, and Hugh, I would say the floor is yours.
Thank you, Jochen. Of course, we got a lovely view over the project here on the title page. I reference our cautionary notes for those who want to find those. Those are on our website. And just to recap, we are a growth company in gold focused on the Beartrack-Arnett gold project located in Idaho in the western United States. Largest past producing gold project in the state of Idaho. We've now got 3 million ounces of gold and in a really interesting high grade zone that we're going to be back drilling this month, which I'll tell you about. Of course, last year we completed a PEA on the first phase of this project, a heap leach restart, which will produce a meaningful amount of gold as we continue to build out the larger potential in the project. And I just, again, point out that we've got a team that's done this before and the analyst backing behind it, which points to a 2 to 3 times re-rating in our share price. So lots of upside in the stock. The next slide here just points out where we are in Idaho. Again, I point out that Idaho has got a fabulous rating in terms of its investor friendliness for responsible exploration and mining.
A short question. Has anything changed through the new Biden administration, or do you have still the same conditions?
Yeah, I think we can expect things to change in the Biden administration. Number one, there's a terrific amount of stimulus, another $1.8 trillion of stimulus that's the American Family Program that Biden is taking to Congress. This stimulus is very good for gold, of course. More specifically on the policy front, I think we can see encouragement for green metals, for job creation, and those things will be good for exploration and mining in the U.S. Of course, we are going to see some of the environmental policies tightened up from the Trump era, but at this stage, and in particular being on a brownfield site, we feel like we're in a really good position here. Strong underpinnings for gold, strong underpinnings in a state that understands the benefits that accrue to the population through responsible exploration and mining, job creation in remote locations, and we're on a brownfields site. 5,800 hectare land position. We've now got 8 kilometers of favorable strike, including 5 kilometers within that, which is mineralized. The resource, which I spoke about earlier, pretty much open in all directions. The first phase of this project that we're put together is 72,000 ounces a year of gold, and that's not something that's way out in the future. That's relatively near term, because of course we're working with existing infrastructure.
And if you say near term, what means near term in your thinking?
Yeah, at the rate we're going right now, we'll complete a PFS by the end of next year, and that will set us up to make a decision on restarting the operation. We'll go through our permitting exercise. We will construct. We could be producing gold as early as late 2024, early 2025. And then, of course, our valuation, which is compelling here. Our infrastructure on the site alone is covered off by our current market cap of about 50 million Canadian. So lots of upside in the stock here. And we've got about $7.5 million of cash going into our work programs starting this month.
Mm-hmm. Oh, great. So news flow is upcoming.
Yeah, we'll talk about some of that, Jochen. I know your listeners like to follow the news flow. I won't spend a lot of time on this page about our first phase heap leach project, but I just want to point out that it generates $36 million a year of free cash flow, and we currently have a 7-year mine life reusing this infrastructure pictured here. Of course, we're only utilizing about a third of the resource on the project. And so every year that we add into that PEA plan is meaningful. Another $36 million of free cash flow at $1,550 gold. Now, of course, we're in an $1,800 gold environment today. And as we've talked about earlier, the price of the metal is only going up from here. But as things stand today, we've evaluated at $1,550 gold, and it's a very meaningful producer, even in the first phase.
Mm-hmm. So that would mean that your average annual cash flow is almost higher than your market cap.
Yeah, that's right.
Crazy.
It's shocking, really. Great value in the stock today. The quick summary on this complicated page is that our capital is only $100 million in this first phase heap leach operation. So it's a manageable amount of money. It's not like we have to go raise billions of dollars or even hundreds of millions of dollars to construct a gold producer from this site.
Mm-hmm.
The project scope follows and is modeled after the prior operation, which was closed in 2000 when the price of gold went below $250 an ounce. And so this means and translates into low technical and permitting risk for the project. And so our intention, as I was saying early, complete a PFS on the project by the end of next year, and then we'll make our construction decision to take this back on track. Mm-hmm. We've got favorable metallurgy, a lot of details on this page, Jochen, but the main point is that we've got an average recovery on this heap leach phase of 60%, and the growth beyond what we've currently got in the resource is in those high recovery oxides. You can see on this page, oxide material generates an 80% plus return recovery, that is. And so as we add oxide ounces to this project, where the deposits are open in oxide material, we will improve that overall recovery and take it up.
Do you think there's also a chance that you can get, let's say, the transition and the sulfide gold recovery in the future maybe up through different technology or stuff like that?
I'm glad you raised this point. The assumptions with respect to recovery that we are utilizing are based on the prior operations track record in the late 90s, early 2000s. So since that time, there have been a lot of improvements in the approach to metallurgy with heap leach. Things like finer crush sizes, things like the way that the heap leach is constructed, the way that the cyanidation is percolated, and the gold price is higher. So the economics on how much gold is recovered become more important, and it means that investing more in operating costs or capital costs that translates into more revenue becomes something, a trade-off that is worthwhile. So we'll look at all of that as part of our metallurgical test program, which is underway now, and we'll have results for the PFS coming in at the end of this year and into next. Mm-hmm. The site layout is very compact. The main features of the site layout will include 2 pits, one on the top right-hand part of your screen here, and the second in the middle at the Beartrack side of the property. And then we have a satellite pit over here at Haidee, where we'll truck material approximately 7 kilometers to the ADR plant located in the middle of the property. This makes for efficient operation. It also means that we keep the footprint of disturbance on the Beartrack side of the property to the confines of the existing plan of operations. That means that we'll have a simpler permitting process. The things that we need to do are well known, and the process is made less complicated as a result. Mm-hmm. And of course, we've got this great infrastructure to start with. Very important for our shareholders, our owners, is the fact that we're using hydropower for the most part in Idaho. It's grid hydropower at a 5 to 6 cents kilowatt hour cost, and that makes it efficient for the operation, but it also means it's carbon friendly. And we want to be wary and conscious of the fact that the environment is to be protected, and the way we operate is to be in keeping with current trends in the way people want to see gold produced. So being on this site is wonderful in that we've got all of the existing infrastructure. We're not going to create a lot of new disturbance, and we've got hydropower, which is carbon friendly.
Mm-hmm. And do you have with the hydropower also enough capacity if you would, for example, enlarge the project later on?
Good question, Jochen. Certainly, the state of Idaho has ample hydropower. It's one of the most productive places in the world for hydropower. The line size that we currently have is good for the first phase operation that we've conceived. We can add mine life to the 7-year time frame that we're conceptualizing without having to make a lot of upgrades to the line. But once we move into a mill operation, which is what this slide present here on slide 12 starts to talk about, we'll have to expand all of that, and it will be a much larger operation. In fact, as you can see on this slide, where we've pictured all of the available open pit and undeveloped gold projects in the U.S. and Canada, Beartrack-Arnett stands in the top 5 in grade amongst all of our peers. And we are a sizable resource. At 3 million ounces and growing, this is a sizable project with high grades and in a great jurisdiction. We're only mining about 1/3 of the material in our current plan, and this is what sets us up for the future exploration and growth potential. And that speaks to our philosophy and our approach as a business. First of all, we're driving value through the restart plan on the heap leach development. That's job one. And that's a low capital, relatively efficient thing for us to do in terms of driving shareholder value from the existing infrastructure. At the same time, we continue with exploration. And this is the second way we drive value for shareholders. We're on a large site. We've got lots of open geography and lots of open deposit areas to drill. And so as the gold price goes up and as we put more money into drilling, we'll continue to expand for the future the deposit and the potential around Revival Gold. And this busy slide summarizes some of that exploration potential. Very quickly, Jochen, we've got a main trend of mineralization here, some 5 kilometers in depth. We've got high grades in the system, 71 grams over 10 meters in the Wards Gulch area. We've been developing the Joss area. Since we last spoke, the results from the Joss area have been released, where we've got 1 kilometer of strike with a mineralized grade of 5 to 9 grams per ton in that area, and 1 kilometer of strike. Lots of potential to continue to expand the deposit there. We've got anomalous gold that we've picked up 3 kilometers south of Joss in the Rabbit area from the program last year. And of course, we've got the Haidee satellite deposit and a number of other projects and target areas elsewhere on the left branch of the property position, including at the Romans Trench area, where along the road to the ADR plant, we've got upwards of 2 grams per ton in oxides close to surface. Lots of exploration targets across this property position.
That's fantastic. I love to see those grades, of course. Would that be, let's say, maybe in the future of the production, a little bit of an issue? Because I would say you're normally doing like, I think it's 0.87 grams, what you have in the resource. Let's call it around 1 gram. And now you come with such high-grade material. Would that mean that you have to blend then in the future, or do you have to add another, let's say, technical equipment?
Yeah, I think the only challenge is in scheduling. Obviously, one wants to mine higher grade material first. And so if we develop a resource out in the Ruins Trench area, we might need to rethink the scheduling of how we go about the mining activity. Of course, we have time to make those adjustments, and that's why we're doing a pre-feasibility study timed for the end of next year. Between now and then, we'll hopefully get in and test Ruins Trench. Our current program is planned to expand the Haidee project area and to build on what we have in the Joss area. So, so we've got lots of time between now and the PFS and turning the switch on for redevelopment of the heap leach operation, and scheduling is what we'll want to optimize. And here's why we're keen to be back into the Haidee Zone. You can see here that we've got the block model in cross section in the Haidee Zone in pink shading. The deposit is open to the north, and drill hole 59 from last drill season clearly points to the potential to lower the strip ratio and increase the resource to the east. To the west, we've got hole 69, the last hole drilled in the program, and it encountered ore grade mineralization all within 150 meters from surface and outside of the existing pit boundary that is contemplated for the current PEA. So lots of potential to increase the resource to the east as well. Of course, in the main Beartrack trend, we've got lots of mineralization over this 5 kilometers. The area of immediate focus for us right now is in the Joss area, where we've got this wonderful trend shown here in plan view, 1 kilometer in length, 14 drill holes, all of which have hit ore grade intercepts of 4 to 9 grams per ton. And importantly, the true thickness on these intercepts is between 1 and 5 meters, which makes it mineable in an underground context and over significant strike length. So we will be drilling here later this month. I look forward to keeping people informed about the start of drilling. And you will notice that this is located in the middle of our property position, so right within roads access, and it's open in both directions to the north and to the south. It's also open at depth. So we're really excited about this target.
But it would be a shallow underground. Did I get that right?
We've now intersected mineralization down to 500 meters. That is relatively shallow, but it's open down to that depth. And so you can see that we can quickly add a lot of tons with drilling in this area. And the deposit's just grown. It's grown and grown and grown. We hit on every drill hole in the Beartrack area. As this slide illustrates, the resources just continued to grow. And that's resulted in a low discovery cost, which running currently at about $5 an ounce. You know, we're going to see ebbs and flows around that, but the point is, at $1,800 gold, this is a value creative exercise in and of itself, adding ounces to our inventory, bringing them into an economic plan. Even before we start thinking about where the gold price might run to, this is a value creating exercise, the exploration development of the Beartrack-Arnett gold project. Since we last talked Hyokin, we've welcomed a new CFO. Lisa Ross joined our team and is illustrative of the quality of people who are attracted to this project. Lisa cut her teeth early in her career with Kinross Gold, a former colleague of mine at Kinross Gold, went on to Kirkland Lake Gold, developed a heap leach project as part of the team at Banro, and then more recently has been working with IM Gold. So Lisa joins us from a producer background. She's been through on a construction team, the building of an asset in a difficult jurisdiction in Africa. I can tell you she's really excited about the potential at Beartrack-Arnett and bringing her strong capabilities to bear. Of course, our operations team and our technical team has a lot of experience. Pete Blakely's the former general manager for the Beartrack site and is busy taking this project forward. Yeah, we've got our Vice President of Exploration, Steve Kriesmeyer, our Head of Senior Technical Advisor, Rod Cooper. All three of these gentlemen have a terrific amount of experience in constructing and operating mines in a responsible manner. And I would point out, too, that we have the permitting and government relations people to navigate the sometimes complex process in the United States of re-permitting the site. Opal Adams grew up in the Lemhi Valley and so understands the people and the direction very well. And Debbie Strusacker, well, she's just a star in the U.S. mining industry and one of my most trusted advisors. Wayne Hubert, independent chairman, has been through this before, both in the U.S. and in Argentina. So this is a team that can construct this operation and credibly take it forward to cash flow.
Mm-hmm. So that means also to me like that they cannot only construct this project, they can also then run the production, right?
Exactly.
Because they've done it before.
That's right. And I think that, you know, whether we are taken out along the way by an acquirer or whether we go into production ourselves and deliver dividends and free cash flow to our shareholders status quo, you want a team that can both construct and operate, and to do so in a manner that's responsible for the environment and for the community in which we're resident. That is something that not every company can deliver. This one can.
Yep.
And I've spoken about this on numerous occasions. We are in a special situation here with Beartrack-Arnett. We're in a brownfield site, lots of past history, award-winning history in terms of our ESG track record at Beartrack-Arnett, the support and enthusiasm of the state of Idaho and the local community for responsible exploration and mining. We take that responsibility seriously, and it's important for our shareholders that we continue to operate with transparency and for the benefit of both the community and our shareholders and the people that work for us. So this is something that's very important to us, fundamental to our core beliefs in operations.
Mm-hmm.
Market cap currently $50 million. As you know, Jochen, we are backed by some of the industry's strongest shareholders. So not only do we have a team that can take this operation through exploration development and into operations, but we have a shareholder base that is familiar with that process and those steps and supportive of management's efforts. And so we're in a really good spot in terms of our ownership. I would like to grow our retail following, and I would like to grow our valuation. And as we de-risk this project, I think with some of the exciting exploration that's going on starting this month, I certainly expect to see that our target prices will be realized, running now 2 to 3 times what our current share price is from the street coverage you can see on this page.
Can you say something on the average target price? I mean, those are really well-respected researchers, right?
They are. We've got and they've all been on site to view the project, to do their due diligence and their homework. And the price targets are, as I say, 2 to 3 times our current 70-cent share price today. So lots of upside in the stock. And even if we were to trade at 2 to 3 times where we are today, we're still only talking about $30 an ounce in the ground. The average takeout price for a company like Revival Gold in good geography with a large resource is in the order of $60 an ounce in the gold. So another 2 times where the target prices are on these on this company. Of course, in a production scenario, typically these companies are valued at anywhere from $100 to $200 an ounce. So lots of upside in the stock here, even just in the next months ahead.
Fantastic. And
the next months ahead look like this. We have exploration and infill drilling starting this month. First place that we'll go in and start drilling is in the Joss high-grade target area. It's just an obvious place to go. The market is interested in the high grade that we have at Beartrack-Arnett, and it's catalytic in terms of what that will mean for our mill phase of the operation. Next, we'll bring a second rig in June, and we'll head up to the Haidee area where we've got that open oxide deposit, and where every year of cash flow adds another $36 million of free cash flow to our current PEA. So that's a high-value target area for us. We've got infill drilling to do there, exploration drilling. We've got a lot of engineering and metallurgical field work going on as well, environmental planning. And all of our work programs are leading to a resource update at the beginning of next year, which will then flow into a PFS on that heap leach phase of operation by the end of 2022. Of course, we are always entertaining the interest of corporates to get to know our project and to understand the value that's coming out of the work that we're doing. And I would say that in that account, we are starting to see a lot more travel in the U.S. The corporates are back visiting projects, and certainly we've got our fair share of guests over the summer. And that's an important part of the job we do, making sure that both investors and corporates are in touch with what we're doing and the value creation that we have in front of us.
Mm-hmm. Fantastic question. I saw $7.4 million in your treasury. Is that enough to get you through for the next resource update?
It is.
So,
yes. In fact, the challenge always is trying to manage, and this is not a good time for us to be issuing equity at 70, 65,
exactly.
70 cents a share. So we certainly have a lot more drill targets, but we've constructed this program such that we'll drill 5,000 meters, and then we'll do the engineering and field work that we have to do and get that resource update early next year. And ideally, that will be a big catalyst for us. And as we release results over the coming months, and I think that inevitable pickup in the gold price will come alongside of that. Both of those things bode well for our investors.
Mm-hmm.
And Jochen, summing it up here, we're in this wonderful position of having a project that can both deliver cash flow in this cycle through a relatively low capital, low technical and permitting risk project. And at the same time, we're building up a resource for a much larger phase, which creates a lot of option value for our shareholders, both in terms of real option value as the price of gold goes up against our 3 million ounce resource, but also in terms of exploration as we continue to expand the resource and we bring those resources into a mine plan. I want to emphasize, we are only at the moment bringing in about a third of our ounces into a mine plan and to the economics. And as we bring more of those ounces into the mine plan, that's going to surface more value and a lot more of it.
Fantastic. Super. Hugh, thank you very much. Oops, I stopped that here. Was that correct?
Yes.
Super.
Yes.
Perfect. Thank you very much for this great presentation. I like the project a lot, and I know also your history, and I have no doubt that you and the team will make that. As I thought, the 72,000 ounces is open pit heap leach. So now we spoke also about underground mining. So would that mean phase 2 would be also in addition than underground mining? And could we expect, let's say, that you go well over the 100,000 ounces, let's say, per year production? I know it's a forward-looking statement for the regulators, but I think we can still guess a little bit and speculate on that, because I think this shows the great future perspectives of your company.
Thank you for the question, Jochen. We do not explore for ounces, we explore for value. And as part of that, part of our pedigree is to always be thinking about value first. And so, yes, as you would expect, we have developed a value model for that second phase of operation. And as you point out, it's all very forward-looking, but it's important for our planning processes so that we can decide where the high-value drill targets reside. And what we've come up with in the initial planning, our engineers said to us, look, let's talk about a 20,000 ton a day mill phase. That's in our 43-101 disclosure with respect to our resource. 20,000 tons a year would produce in the order of 300,000 ounces a year of gold at our grade and at our recoveries from an open pit scenario. And that's where our initial focus was, in that open pit. But what we've done over the last year is develop a very strong underground target. With more drilling, we get more visibility on the continuity of grade in the underground setting. Of course, the deposit's open, so it's not for lack of structure or gold potential, but we need to do the drilling to develop out these underground targets. And the catalytic aspect of these underground targets is the improvement to the overall grade in the plan. And what does that do for us? That means we reduce throughput, perhaps bring it down in half to 10,000 or even less, maybe 8,000 tons a day. And with a lower throughput, we get lower capital, and we still maintain that 250,000 to 300,000 ounce a year production possibility. So what we're now contemplating is a first phase operation, which will produce 70, 80,000 ounces a year of gold from heap leach. We think we can take the current plan of 7 years to something like 9 or 10 years. And then beyond that, a mill phase of operation where we start out in a combination of near surface, we've got 1.5 grams in the indicated resource, open pit gold ore feed, as well as a smaller quantity of underground feed, in the order of 5 to 6 grams per ton. Mm-hmm. In doing so, we have this lower capital, lower throughput, lower footprint second phase operation, and we have something that has a meaningful mine life and meaningful scale. Now, it's going to take time for us to put all that into a plan that we can discuss in detail with our investors. But going back to your earlier point, we do have a concept, and we're working on the exploration and the engineering around that concept. In the first instance, we want to deliver a PFS by the end of next year, and we're doing the engineering work and the exploration required to see that through. But if we get a chance, we will very soon be tagging onto that a PEA with respect to a much larger mill scenario. Much larger, not in terms of the scale of the operation, but in terms of the scale of the production. And that's where we create value for shareholders.
Super. Create value for shareholders. A great final sentence. Hugh, thank you very much. That was a fantastic update. And of course, we look forward then to your drill results and to a very good news flow. And I hope that you hit with every infill hole. It would be great. Super. Thank you very much. Yeah, ladies and gentlemen, that was Hugh Agro, the CEO of Revival Gold. I think an outstanding company, definitely highly undervalued, with a 50 million Canadian dollar market cap. And you heard it from Hugh, even the cash flow in the first phase of operation is more per annum than the market cap. Those are situations we love as investors, to be honest, because I love to buy early into such gold projects, and I have time, no doubt. And also I see a lot of potential for this company here. And as he said, the news flow is starting. They are financed up to the resource update. This is also very important because I could imagine that the resource update will be quite good. And then they can probably finance for the next stage for the pre-feasibility then at much higher prices, which is lower dilution. This is also fantastic. And also what I like is the ESG perspective. On the one hand, environmental friendly, and this is a brown side, and hydro power. This is also really important. Strong shareholdership, strong ownership, 11% owned by the management. Those are the things we really like. And it's in Idaho, one of the best mining places in the world. I would suggest you really check out the company. We have already a price target from our side, $2 Canadian for the company within the next 18 months, just that you know that. And yeah, keep safe. Thank you very much for watching us, and bye-bye from Switzerland.